What's going on, guys? Welcome back to another video. Today we're going to be discussing RSI, or the Relative Strength Index. Now this is probably one of the most common indicators you see a lot of traders using, and today I'm going to show you guys exactly how to use it and how to set it up on your Thinkorswim platform if you don't already know how to do so. So the first you guys are going to want to do is you're going to go right to this spot on your chart or on your screen and click that beaker. Once you guys do that, a new window should appear. From here, you want to type in the search bar RSI, and the first thing that's going to pop up is RSI. You're going to want to highlight that or click it, click Add Selected, then hit Apply and hit OK. Now, what has been added on the bottom of this chart is what we call the Relative Strength Index, or RSI indicator. First, you have to understand the most basic understanding of RSI. So first things first, you have the number 70 here, the number 30. You will also see two lines that go right across horizontally. Whenever the price dips below this line, it's supposed to mean that the stock has been way oversold, and the stock should actually start to increase in price because the stock has been oversold so much. And when the relative strength is over 70, it's saying the stock has been overbought and the stock should soon come down or see a sell-off occur. So that's exactly how you add it to your chart, and that is the most basic understanding of the relative strength index. And that is not how you should go about using the relative strength index when it comes to trading. There's a much more effective approach to using this when it comes to trading, and that's what I'm going to show you here next. So here's an example of why we don't use the basic understanding of RSI for trading purposes. This is the stock price of Tesla. As you can see, recently it has pretty much skyrocketed, going from, $300 all the way to $1,000. So just in the past couple months, Tesla has jumped $700 per share. And over the course of that whole time period where it went up $700 a share, the RSI was saying it was overbought. So if you decided not to buy Tesla because the RSI said it was overbought, then you potentially just missed out on $700 per share. Now, the RSI is correct. Tesla is in fact overbought, but just because it's overbought does not mean that it has to come down. And just because it's overbought does not mean that it can't continue to go up. So what you guys have to understand is the relative strength index is a momentum indicator at the end of the day. And really, if a stock is going up like this, then chances are when you look at the RSI, it'll be doing something like that too, or trending in somewhat the same direction, up. That would make sense because as the stock is picking up in momentum, then the RSI momentum would naturally be picking up. What we're really looking for when we use the RSI, or the relative strength index, is we're looking for what we call a divergence. This is when the stock price is going up, but the momentum is doing the opposite. It's going down. Or if a stock price is going down, we're looking for the momentum be going up. When we get that divergence, that is usually when we can start to say to ourselves that this stock is probably getting ready to reverse. Now what we're going to do is I'm going to show you guys a couple examples of divergences on larger time frames and smaller time frames. And we're also going to take a look at a trade that we made last week on Netflix, which had a divergence on the 1 minute time frame intraday. In a second here, I'm going to pull my face back from the screen, and you're going to see a stock that everybody knows about that was just talking about because it jumped $100 or so per share, and you're going to notice this thing had a massive, massive bullish divergence. BYND. You guys remember that one? And you remember it just from like a couple weeks back? Well, look at this. Let me pull up the RSI. So this is on a daily time frame. A 1 year, 1 day time frame. Let me pull this up like that. You will see that the price of Beyond Meat had been trending down, or trying to go down, shall we say. Yet the whole time, the momentum was going up. Till eventually, we had maybe a little bit of a news break, and then we got this monster push right back up. So for a long time, you could have been telling yourself that as this went up and then as this came down and we started to get this divergence, that was the stock putting in a bottom, getting ready to reverse the other way. So now we're taking a look at McDonald's, and here's another divergence. And as you can see, the price falls off. So now what we're looking at is Netflix stock just from a couple days ago, and this is a 1 minute time frame. So this is to let you know or show you that divergences can happen pretty much on any time frame. So here we have a divergence, a bullish divergence. And then you can see the price reverse. If we put the trades on, you will see we traded and entered right on the bottom of that drop and then started to sell as we increased from that point forward. So when it comes to an intraday time frame, like a 1 minute time frame, and you find a divergence, many times the best profit target or the easiest one to obtain will be your most recent resistance level. So as you understand that a divergence is taking place and you get long, usually your easiest sell target will be the first level of resistance. Normally, if it's a true divergence play, the price action will typically reverse to that first level of resistance. From there on out, it can get a little bit more challenging. Now what we're going to do is we're going to take a look at a couple stocks that are in divergences right now, so that way you can keep them on your radar and possibly even play them in the future, or just follow along to see if in fact what you've learned in this video does come true. Based on the signals we're getting with RSI, it looks like we are going to be seeing a reversal and or a correction happening on the stock AMD. We have a bearish divergence here. Since AMD is a chip stock, let's see how all the other chip stocks are performing. Do they have any sort of similarity? Here's the stock NVIDIA. NVIDIA does in fact have a bearish divergence as well. So if AMD and MU both have bearish divergences, what about Micron? MU? Oh, MU starting to get that bearish divergence as well. How about you Apple lovers out there? Do you guys think that we might see a little bit of a correction coming on Apple? Well, based on what the RSI is telling us, it does seem likely we could be seeing some pullbacks occur. So now we're going to look at the SPY and just have some fun. Divergence, drop, back up, almost into a new high, double tops, lower divergence, gets another drop. Then we broke out, as did the RSI, and we've been trending up ever since, but we're starting to see this move is getting a little bit weaker. So it's possible we could be looking at another pullback or sort of correction in the S&P 500. So the last thing before we go, just to recap, remember that a divergence is based off of momentum. If a stock is going up and the momentum is going down, there's a good chance that the stock is going to reverse in direction. And that can happen on the downwards direction, and that can happen on the upwards direction. If the stock is going down and then it bounces up, we call that a bullish divergence. If the stock is going up and the momentum is going down and then the stock drops, we call that a bearish divergence. So just to refresh, the easiest way to remember it is if a stock goes up, puts in a high, pulls back, puts in a new high, but you look at your momentum and your momentum looks like this, then that means you have a bearish divergence and there's a good chance the stock price will roll over. If the stock price is going down, puts in a low, bounces, puts in a new low, and you look at your RSI and your RSI looks like this, there's a good chance that that price is going to bounce and it's going to reverse. So there you have it, guys. That is exactly how you should go about using the RSI or the Relative Strength Index. So I hope you guys liked the video. I hope you learned something new. As always, make sure to thumbs up the video on your way out, and I'll see you guys on the next one. Take care.